Hello, YouTube. Hello, X. Welcome to my live. My name's Max. My channel's name's The Covered Caller. I talk a lot about these high yield ETFs and the strategies that power them. So, how's everybody doing tonight? I see we have Chad in the house. Thank you for being here, Chad. Chad says, waiting all day for a Sunday night. Heck yeah. I know that feeling, except I wait all weekend for a Friday night back in the old days. All right. Well, remember, as always, these videos are not financial advice. Consult a professional for fun and entertainment only. Also, if you'd like to support the channel, you can do so there. And also, all right. And also, that's it, I guess, is also. All right. So let's see what we have going on. First, of course, and always, we're going to go check the market. The market's why we are here. These high yield funds are fun, but they're totally dependent on which way the market goes or whatever their underlines are. So, and I've been worried about Bitcoin lately. Oh, good, it's bouncing. Thank goodness. Thank goodness. Now I have down here that I thought this green area would be a place to buy the dip, but anyway, we might still get a chance later. It looks like it's done the old reversion to the mean, because it fell out of this balance and now it came back up and it looks like it's almost right about to the mean in this trading range, which is right at 95,000. Well, that'd be a first step for the bulls. And another step would be, to make it into the higher trading ranges. We're going to have a real key number is 99,275. Here, I'll put a yellow line. That would definitely be a first down for the bulls if they could get a close on the other side of that. All right. So we'll see what happens. Let's see how the stock index futures are doing. I'll go shut Discord here in a second because it's beeping. Stock index futures also, well, they bounced a little bit, but they're right here trading around their mean at 67.75. That's good. All right, I'm trying to see where they opened at. It looks like they're up a little bit from the open. Let's check out the old NASDAQ. Oh, nice. NASDAQ's trying to make it back to its mean right here at 25,284. That'd be good. Of course, 25,284 was also, or right about there, was also was support for a while until it broke. So that would be a big deal if we can get the NASDAQ futures on the other side of that. Bulls start operating on the other side of that. That would be good. If Bitcoin could just bounce, I think it could bounce and stay bounced. I think it would actually be a good thing for the market. All right. Am I sharing the screen? It looks like I am. Who else here? We got, yeah. Hey, Rod. Hey, just real quick. Rod has a show tomorrow. He's asked me to be on. Has nothing to do with me. But I mean, other than the fact I'm the guest on it, which I'm super happy about. I've been waiting for this since like September. Rod put it out. He said, are any of you influencers willing to come on my show? And anyway, and somehow I said, yeah, me, but I didn't email him. But I put, yeah, me. And then he already booked the first like 2 months worth of shows. And I made a comment. I said, it looks like I didn't make the top 20, but Rod didn't see my comment. I should have emailed him. Anyway, all right, Grumpy's here. Dividend Degenerate's here. All right, we have a crowd here. We have 25 people in the house. Okay, so tonight is a daily factor. One of my daily factor shows. So you guys who've watched my daily factor, what is going on? I don't like that style. I like the minimal one. I like where it doesn't. Yeah. All right. Anyway, my daily factor show. The daily factor is my own proprietary metric. And the reason I invented it is because sometimes total return can be deceiving. These ETFs, the high yielders, they have a special property in that's kind of that they pay out too much money. The amount of money they pay out, broke the total return metric. So that's why I had to design the max factor. Jackson, what are you doing? You all right, buddy? You want to come make an appearance? Nah, he doesn't want to make an appearance. All right. Well, anyway, so this is my own proprietary metric. I look at the risk-adjusted reward of all these high-yield ETFs, and my figure's not an absolute figure. It's relative. I throw them all in a universe of 157 high-yield ETFs, And so even if they all suck, even if the market's crashing and they're all doing terrible, something will be doing better on a relative basis. They're relative rankings. So when I consider the total return, well, I don't actually consider the total return. I take that back. I consider the yield, even though the yield is absolutely the number one most deceptive thing to look at in these high yield ETFs. Of course, I consider the yield because that's part of the equation, but I also consider the NAV return. Now, and I consider, and together the yield and the NAV return make the total return, but I consider them separately. And what I'm studying and what my figure shows is it shows how the two affect each other. They work in opposite ways. You have a high yield, you're going to have less NAV return. You have a low yield, you're going to have more NAV return, other things being equal. But like I say, this isn't an absolute judgment. We can judge all these things against each other and see which ones offer the best relative stability and safety and all that kind of good stuff. All right, so let's get this show on the road. Let me find my graphic. Okay, here it is. So tonight we have SPY Sunday, and I really like, I'm a sucker for index funds, and just not only index funds, index ETFs like the SPY, IBV, VU, VTI. Just, you could do a lot worse than just buying a bunch of index funds because you don't have to worry about selecting the stocks. You have the whole index. And not only that, if you have the S&P 500 and you've had it since like 2008, if you've had a job that long and you've been contributing to your 401k or whatever, the SPY was 67 points at a low in 2008, 2009, and we're about 10x of that. So that's really good. The other thing that's really good about the SPY is as companies suck, they're dropped out of the SPY. So it's kind of a momentum index also. So that's something else that a lot of people don't consider. And as companies, blow up and stuff, they're added to the SPY. So, and the same thing goes for the Qs. It's just it's a great way to invest, and I like that. Now these high yield ETFs, it's different, but I like the ones that are using the SPY or the Qs as their underlying. I think these are some of the best ones out there. So let's go yield chasing, like I always say. It looks like, gosh darn it, hang on here. Okay. All right, so let's go yield chasing. So number one is YSPY, and I had this one myself and actually did all right on it, but I was just getting nervous about the market about the end of October. So I took my profits in YSPY, but it was actually a pretty decent fund for me. Anyway, who cares about me? Let's see how it's done over the past 90 days. Yield's 53%, and the NAVs and the price has gone from 1964 to 1890. So, it's a little bit of negative NAV return, but it has a ton of yield. So that kind of makes sense. I mean, anyway, then we have XDTE. This is a good one also from Roundhill. These guys do a great job. This thing, as far as the NAV, it's gone from 44 to 43. It's paying a 30% yield. So, I mean, I trade 2% for 30% all day long. All right. Now, SPY-T, this is a 10% or 20% target fund. This is from our friends over at Defiance. The NAV is down on this one a little bit, not a whole lot, but it is down a little bit, but it pays about a 21.14% yield. That's on a trailing 12-month basis. Their target's 20. Anyway, IVVW, this is from iShares or BlackRock. I believe this is based on the S&P 500 or the IVV. And this thing has gone from 45.74 to 46.41. So it's up, what is that? 26 plus 41, whatever that is. It's what, 68 or 67. I mean, anyway, so it's up 1.46 on NAV, but it pays 16%, which isn't too bad at all. Then we have T-SPY. T-SPY is a really good one that I like a lot. T-SPY was the first one to figure out, or maybe not, T-SPY and XDTE were the first couple that I know of that did ODTEs, 0 days till expiration options, but they kept themselves uncapped at night. And in a bull market, both XDTE and T-SPY have been handsomely rewarded. Especially XDTE. When it came out, I swear for a while, every time I looked at it, it was beating the SPY for a while. It was just really on fire, and it still does very well. T-SPY is the same deal. They only sell options in the morning, cover them at night, And then, so anything that happens at night, they're unencumbered by options, meaning uncapped. Anyway, this is a good one. And you can see it's been helping the NAV. I mean, it's gone from 24 to 25. I mean, it's up 1.37%. Not a bad deal at all. That's from our friends over at Tap Alpha. Good fun there. All right. Then we have XYLD. Now, this one is paying about 11.78%. It's from Global X. Now, this one's actually on NAV is doing pretty dang well. It's up 3.07%. They use monthly options instead of dailies like T-SPY or like XDT for that matter. And it generally means they're going to be a little bit less volatile, but probably pay a little bit smaller yield. And you can see that holds true. That holds true in this example. But NAV's been really impressive on this one. So far, this one is our NAV champion, little old Global X. All right. If it was a runaway bull market like it was 3 weeks ago, 4 or 5 weeks ago, this one would not be our NAV champion. But this one is our NAV champion in a kind of a down market. Is that the monthly options give it a little bit more safety. All right. Then we have SPY. Now, this is a really good one from Neos. Pays about an 11.72% yield. NAV's up 1%, about like all these other ones, good job. Then we have RSPA. Now, this one right here is based on the equal weight SPYs. So instead of cap weighted, so, the cap weighted SPYs have like 8% NVIDIA, 7%, I don't know, Facebook, or, 6% Apple. And I go, whatever. These just have, let's see, you divide 500, or what's 1% divided by 500? It's 20 basis points. So this thing will have 500 stocks in equal weightings, 20 basis points. So just think about that. So instead of having 7% of NVIDIA, this only has 0.2% of NVIDIA. So it has 1/35th the size of NVIDIA. So what does that do? Well, it helps you in a bear market, helps you on the way down, but it hurts you on the way up. On the way up, you want to be overweighted in the leaders, generally. All right. So then we have SPIN. This is from State Street. It's their S&P Premium Income Fund or something. Pays about 8.4. NAV's really good. NAV's up $2. This is our new NAV champion. These guys also use monthly options. Monthly options are better at catching NAV, or I should say they're less effective at capping upside of the NAV. So, and that really pays off there. But the trade-off is, of course, like anything else, lower yield, more NAV. And generally you make a little bit lower yield with the monthly options, but they can be really, a good strategy. Now we have JEPI. Speaking of monthly options, these guys also yields a little bit on the light side, but I'm almost thinking that's not right. There's no way it's flat. Anyway, I'm not going to worry about that. Anyway. All right, GPIX. Now, this is a good one. This is definitely a good one. This is from Goldman, and monthly options, I believe. It's been a while since I've reviewed it, but I would imagine with a yield like that, it's monthly options because they usually get a lot of upside compared to these other ones, and they have a little bit lower yield. So, that's a good one. I believe it has a really reasonable expense ratio also. And then we have SPUT. This is an S&P put right fund, and this thing pays the lowest yield, but it has respectable NAV. Heck, the NAV's more than respectable, up 3%. I mean, so now let's look at the stable dex. Now the stable dex is relative stability. So if you're a 1 on the stable dex, you have market stability. You have the same stability as the S&P, as the SPY. So this XYLD from Global X, they sell monthly options. That's part of the deal. It's also part of the deal. They don't pay out everything they earn. They manage the distributions. They don't call it a target 12 fund, but it trades like a target 12 fund. And that gives it a heck of a lot of stability. I mean, great stability right there. All right. So then we have JEPI. Now, JEPI, super stable, 1.7 times as stable as the market. SPUT doesn't earn a lot of yield, but super stable. IVVW, monthly options, super stable. GPIX, monthly options. RSPA, probably monthly options, but also more diversified. SPY is 1.25 times, is 25% safer, less volatile than the SPY itself. That's really impressive. Then we have SPIN. All of these are pretty safe because these are based on indexes, SPY-T and XDT. Those are all market stability or greater. Now, the ones that are a little bit less would be T-SPY and Y-SPY. And those, T-SPY uses daily options. Not that it's not a good fund. It's an excellent fund. Friend of the station, Matthew Tuttle, I believe is this one of the sub-advisors, from Tap Alpha on this one. Anyway, I like the fund, but it's a little bit on the more volatile side. It's 96% is safe, still very safe. And Y-SPY. Now, Y-SPY is from Granite Shares. They sell put spreads, which is synthetically the same thing as doing a collar. You can sell a put, and then you can buy a put that's further out of the money, and it's the same thing as buying the stock. Selling a call at the same strike you sold the put at. And then the other put just stays there. It's a caller, put spread, exactly the same thing. It's same risk, same reward, same everything, but you save money. But now the catch with these guys are they sell put spreads on leveraged ETFs. It gets them a lot more yield, but it hurts them in the stability department. They're about half as stable as the broader market. All right, so that's our lineup. Do you guys like that lineup there? Do you guys like that lineup? I'm just going to make sure there's nothing going on over here. All right. It doesn't look like there's anything going on over here. So let's just get this over with, and we'll see who number 1, 2, 3 is, and then I'll get back here and I'll answer questions. I'm glad to see that what WPay is looking good right now. That's awesome. That's awesome. All right, Froggy, thank you very much. It's hard to get much better than this. To me, in the high yield space, the S&P based ones and the Q based ones like QLDY, ones like Triple QI is a really good one. The one, I think these are kind of the class of the field if you're willing to take a little bit less yield because it's spread over 500 stocks. They aren't as volatile. But then if for somebody that really likes a lot of yield, the really class of the field is the ones that have 15, 20, 30 stocks like like K yield and like the one like Alt I and Alt Y and blocks. But anyway, we aren't talking about those today. We're going to talk about these. But thank you for the compliment there, Froggy. I appreciate you. So let's check this out. All right, let's line it up by the max factor. Yeah. XYLD. Now, I may have an editor's choice and may override that. But the numbers are what the numbers are. Look at it compared to number 2, which is spin from State Street. Spin from State Street has twice as good of NAV return. So it ought to have about half the yield, but it has a little bit more than half the yield. Anyway, but the stability is what put XYLD over the top. But on an editor's choice, we're going to choose a different one. I'm going to choose IVVW or T-SPY or SPY-I. There's a lot of good ones in this one, but I'll just choose IVVW on the editor's choice. A 16% yield. From one of these, and no one ever talks about that. I don't have any of it. I really need to get some of this. Anyway, number 2, spin. Any of these could work. Spins, pays a little bit less, but the yield's absolutely incredible. It's more safe than the broader market as a whole. IVVW, this is 16% yield. I guess the highest yield out of here, other than T-SPY, and I like yield, and so that's why I think IVVW looks pretty good. But now, granted, it only gets half of the upside of XYLD, at least over this past quarter it has. Then we have SPUT, GPIX, which is a really good one. SPUT kind of a little bit lower on yield, but they do better on NAV, and they both do really well on safety. T-SPY would be my runners-up on editor's choice. So IVVW and T-SPY are the editor's choice. SPY-I is a good one as well. It's a little bit light in the NAV return department this quarter. When you consider T-SPY has better yield and better NAV return, So anyway, RSPA, this is a good one for hedging purposes, 9%. CHIP-I, SPY-T, XDT, and Y-SPY. These got hurt. They were a little bit riskier than the other ones, and they got hurt on NAV. So that is that. I hope you guys like that. Yeah, good point, Easy, or Chad, I should say. Yeah, if you don't mind, hit like. It helps the algorithm, or hit don't like, but react to it in some manner, and that's fine. But it helps the algorithm. Engagement is what it's called. That's what they call it in the algorithm. I've been watching a video today on how to, different ways to make money off YouTube for creators. I watched a video by another creator, and this guy's making he's a music creator and making, I don't know, he said multiple six figures. But anyway, so I'm in creator mode tonight. So what is going on? Green Monday? I don't know. Return on dividends. I don't know. In fact, I would say, I don't know. Hopefully this last little dip down to 93 in Bitcoin was the last bear trap. People probably got short, and then they're late to the party. And if it rips the other way, then they cover. And maybe we have a day where we're up 5% on Bitcoin or something. But we could be up 5% like 2 or 3 days or 2 days and still be under the 200-day moving average. We've done a lot of damage to the chart. Just we're going to talk technicals here for a second. So, I mean, yes, the bounce is wonderful. But the first thing the offense needs to take back, I guess the first down would be to take back the moving average and get on the other side of this trading range. And then we could drive down the field and make another first down if we took back this double bottom right here, because that's kind of what separated the higher trading range from the lower trend range. And once we're up here, maybe we can revert to the mean, this mean, which is the biggest mean on the chart in the time frame I follow. That'd be 101. So that's kind of the steps there for the Bitcoin bulls. Of course, the bears just want to make a new low, and the bears would love to get a gap fill. There's a major gap fill, and Bitcoin doesn't really gap because it trades at night, but there's something happened and it barely traded in this range. You can look at the volume figures and stuff. So presumably there might still be people there with resting orders. Anytime we got close to that range a couple of times, and that was a good spot to buy. And we haven't been close since. We'll see. Now, also, if it goes right through there, that tells us something also. And that's but kind of the base case is we expect to see buyers there. We'd expect to see some kind of reaction there. So now let's check NASDAQ futures, and then let's check some after hours. Oh, I don't have after hours quotes. So let's talk about WPay. So WPay is doing good after hours. I mean, this sometimes shows it, but really you need to look at Robinhood, I think, with the 24-hour market. Yeah, in the morning it'll show like a pre-market. It doesn't show post-market, but with Bitcoin and with some stuff bouncing, WPay ought to look a lot better. It really ought to. Let's put it on a longer time frame here. Let's go out to a day, see where it's trading versus its moving averages. Okay, well they just got a 50-period moving average. It's a brand new stock, and they're underneath it right now. But I mean, market's pulling back. What you going to do? So let's look at like Blocks. Now Blocks lost its 50 a long time ago. And this one's highly dependent on Bitcoin. So you can see here, we can pull up a chart of Bitcoin. And there's a chart of Bitcoin, or IBIT. That's our proxy. Made a high on October 6th. Made a lower high on the 28th. Blocks did the same thing, a high, then a lower high. And then right here on this day, they took out the low of the Bitcoin chart. And sure enough, now the low on this chart was still, in, but anyway, this is following Bitcoin. So unfortunately, we had to have Bitcoin turn around. Bitcoin turning around would be a big deal there. Now let's check ULT. Let's check ULTY. this one has been under its 50. We don't have a 200 on the other one. This one's been under its 50 a lot longer than Blocks has. Blocks has held up a lot better versus its 50. In fact, this one even went under its 50, went back and tested and it failed. Now it's taken out its 200. That's the definition of a bear market, plus being down 20%, which they probably are, 508 to 415. What is that? 90 cents on 5. Yeah. It's actually down about 18%, but it's teetering on a bear market itself. Now let's look how this one compares to the IBIT chart. So the October 6th was where IBIT made its high. And this one actually, ULTY actually didn't make its high until October 10th. But then Bitcoin started making lower lows. This did too. And I think on the 30th, I got out of a third of my position of this one just because I didn't like the market. I could, maybe I'll buy this one back, or I'm going to buy something back. But I want to see Bitcoin stabilize. All right, so that's that one. So we looked at Blocks. We looked at that one. Let's look at old K yield. Or the better way to look at this one is let's do this. Let's do it like this. The diversified divas. Let's check out our dashboard here. Okay. And this is out of all the ones that I really think the SPY-based ones are probably the best if you had to put all your money in any one ETF, or a Q-based one based on the broader market. But if you want to get a little bit more return, not return necessarily, but yield, and possibly return, but yield for sure, you can step out and do one of these funds that has a basket of 15, 20, 25 stocks. They've been around for a long time. FEPI was the first one I ever heard of like this, and FEPI is a really good fund. It took a while for the other guys to catch up, but then then WiMAX came out, then ULTY came out, then anyway. But look at this, QLDY, which is the lightning spread fund based on the entire NASDAQ. Now, this one isn't really a basket of stocks, but I just like this one. So that's why I compare it with these other ones. But ULTI is definitely a basket of 15 to 20 stocks. And that one actually got off to a little bit of a rough start. These have only been out 2 weeks and 1 day. So this is based on a very small amount of data. Look at this WPay, highest amount of dividend. They paid $1.14 so far. And the average return of these, the past 2 weeks has not been friendly to these. Think about that. The average return is down 12%. Anyway, we can look at each individual one. We have SPY and the Qs. But then right here next to it, QLDY, the lightning spread based on the entire Qs. Like I said, not really fair to compare it to these. Maybe I need to take it out. But I probably need to take it out and put WiMAX in. WiMAX is a basket of 50 or 60 ETFs. It's more of it'd probably be more fair. Plus I have WPay in, and WPay is kind of like WiMAX. All right. And then Chippy, look at old Chippy here. Now Chippy is a basket and that's doing great, but of course that's mainly because of AMD. And then we have GPTY. I made a video about GPTY today. You guys may have seen that. That one's kind of a stealth ETF. No one ever talks about it. And it only has like 80 million under management, but it beats a lot of the stable, the ones that people really love and think they're stable. And they are. But anyway, this one's been doing really, really well lately. WPay is a good one, down 8%, less than average. Average is 12. WPay is protecting capital well, even though they have a little bit of leverage. So far, in the past 2 weeks, they've been protecting capital better than some of these other ones. Part of that is because when you do get an up day, WPay is able to bounce a little bit more also. So then we have K yield. Now this one, is down 9%. That's a good job there from our friends over at Curve, doing better than average. And then we have Alt-Y is doing we'll just call that a tie with average. Alt-Y is right on the average. And then the ones that are kind of outliers on the downside, unfortunately, are LFGY. Or I guess fortunately for me, because I'm all the way out of it. But I'm also all the way out of GPTY. Anyway, it's fine. And then we have Blocks, and of course, Blocks can go up really fast too. It's been a tough time for crypto. Crypto's in a bear market, so Blocks being down 22% in 2 weeks. That's kind of par for the course. And ULTI, ULTI, hopefully this next week it'll come back. But then we can look at it on the dividends distributed. And this is in dollars. I told them to put it in percentages. I don't know why they don't take, Claude doesn't listen very well sometimes. But anyway, dollars, dollars are fine. So received $1.14. That's a great job, WPay. ULTY is the least. It's paid 2 7-cent dividends, or 1.8 and 1.6, and it's adding up to 14 or something. K yield, that's kind of the brand on Curve, is to pay a little bit less in dividends and try to save it for the NAV. Howard, when he was interviewed about this, he was talking about they're going to make a bank or something. They're going to make a reserve, and they're going to get there, and they're going to really manage the distributions. And I'm sure Howard's going to do a great job on that. Blocks, Blocks is about a 35% payer. So Alt-I, I don't really know that much about it yet. It's only had one dividend. And so is K-Yield, where these other ones have had 2 dividends. Some of them maybe even 3. Or QLDY has had 4 dividends, but it pays twice a week. But then on the better dividend paying side, you have QLDY. That's going to pay, I think, high 20s, low 30s. GPTY pays 30, 35, something like that. Chippy's a monster. I mean, Chippy's an absolute monster. LFGY doing a great job on dividends. That's really good. And then, of course, WPay is killing it. The fund to funds from Round Hill. This chart isn't really that good. So as far as, I still thought they put percentages on here. Anyway, whatever. It's all good. Let's just go to dividend focus. Let's see what that gets us here. Dividends, price change, total return. Well, anyway, I think that's a good explanation of how those are doing. I hope you guys like that. That's a little extra bonus content for you guys. So Hood, Tesla, and MicroStrategy strategy all read overnight. I'll try to get better about saying it. Well, dividend, did you earn it? I'm glad that you're up this late. I have to get up early. So somebody in my Discord, I think I have some guys in my Discord that get up early. I'll put the message in there also to remind you guys. But if I don't say something by 5:30 East Coast time, I'm gonna get up, take Jax for a walk. If I don't say something by 5:45, start blowing up my phone. I think I can count on some of my East Coast guys to do that. But I'll be up. As soon as I get up, I'm up. I'm gonna take Jax out, take a shower, and then I have the Rod interview at 5 my time, which is 6 Rod's time. So it's gonna be an early night for me. Also, I don't have anything else to say. I was just gonna answer questions, shoot the breeze with you guys. We can talk about girls, cars. I tell you about my jog I went on with Jax today. Man, Jax and I've been hitting it hard. The past 2 days, we've had a couple of good hard runs, and it's really hot here in Austin. We've got a little Indian summer going, and I mean it's maybe Native American summer, but nowadays you can say it. It don't have to be politically correct anymore. But anyway, it was probably 85 degrees, 80 degrees. It was really warm, and we got a mother of all workouts. But anyway, so DD, if you got to get out of here, it won't hurt my feelings at all. Like I say, I'm done with the presentation. I do have other stuff we can talk about, but the market hates you, Grumpy. I'm sorry. Yeah, T-Spy is a good one. T-Spy. I mean, they did 2 things that no one else was doing, and they're the first ones to do it, I believe, that I know of anyway. And one of them was to do the 0 DTE options, but only to sell, but not to do it a 24-hour option like Defiance does it. Defiance was doing the 24-hour option, paying a lot of yield, but having poor NAV results, and kind of got a reputation for poor NAV results. So T-Spy came in and fixed a lot of that problem. So they did that. Then also when T-Spy first came out, I think they were just paying maybe like 11 or 12% their first dividend or something. But I saw Psychotar on the show, and they boosted it up to about 14 or 15, and they did it by they're selling just a teeny little amount of stock anyway, just to kind of boost the dividend. Well, since they did that, now we have XPay doing that, or XPay just does that. That's all they do. They sell stock to pay the dividends. But there's other ones that are doing the sell stock, and that test out pretty well lots of times. But yeah, T-SPY is a good one. You saw it was second or third on my editor's choice. It's just hard to ignore IVVW. I think the killer thing about IVVW, I've got to get some, but there's just so many out there. I mean, I'm just so in love with these portfolio funds, but they're killing me. I mean, I added the blocks about a week ago. I bought WPay, which I'm happy with, but about 2 weeks ago, it's gone nothing but down. But anyway, this IVVW, I mean, because it pays 16%, that's good for an index-based fund. It hasn't taken back its high, from that. That's not the best look. Maybe I'll take back the Editor's Choice Award there. The yield's been good. And look at the expense ratio, 25 bips. It's super safe. But yeah, I'm going to take back the Editor's Award. Let's run T-SPY in here, T-SPY or I-SPY, because I do love upside. And I bet T-SPY is taken back. It's close enough. Well, let's look at I-SPY, and whichever one's closest, that'll be the Editor's Choice Award. I-SPY is a good one too. Yeah, I just like T-SPY since I was on the channel, and Matthew Tuttle's the sub advisor. T-SPY is the Editor's Choice, and also because you guys also based on your input. But yeah, Chad, I agree with you. So LFG yield boost, heck yeah. Heck yes. So what are you saying, Chad? Way too many 50-week low. Yeah, I know it. XDTE is a great place. Bill, I don't know if I've seen you in here before. You may be a first-time commenter. Anyway, yes, XDT is phenomenal. When it came out, it also did selling the ODTEs, but only during the day. I don't know if they were first or T-SPY was first, but whatever. It's a great plan. Let's take back a look back in the history of XDTE. So XDTE, let's just run it against SPY, and let's just go back since inception. So it came out March of 2024. So, by, let's see, March of 2025, or wait, let's look at the first year. I think the first year it beat the SPY. That's amazing. It's absolutely amazing. And we don't want to go too far into March because the market started petering. But I mean, that's dang close. There was points in here when I tested it, because I remember looking at it, I was just like, this thing's, and it's paying like 30% or something. It's amazing. It's absolutely amazing. I used XDT for a comparison in my video today, or as an example of a good fund, and it is. Let's look at QDTE over the same time frame against the Qs. Once again, it was beating it for parts of the year. It fell a little bit behind, as the market pulled back into, but it was almost beating it over the course of a year. I mean, that's an amazing fund too, but that's kind of why I did that. The video today, a lot of people just don't realize how good GPTY is. And I made a lot of comparisons with good, safe funds, and GPTY is beating all of them for the quarter, for the year to date, since inception. Or there was two that it couldn't beat, that it was a little bit behind. GPIQ from Goldman Sachs and Tuggin. Those were the only two counter examples I found. But I didn't show this in the video, but I think maybe GPTY is beating the Qs or close to it. Not beating the Qs since inception. Okay. But I mean, look at that. I mean, of course it is with dividends reinvested, but that's kind of like cheating. But I mean, this is GPTY is this year's version of what XDT and QDT were doing, where they're just hugging right with the market. So let's do it like this. Let's go August. Let's just look at the quarter. August 14th. That's August, September, October, November. Yeah, that should be close enough. I mean, what more do you want from a fund? Look at that. I mean, gee, criminy. You know, when it's doing that while it's paying a $4.58 dividend, it's just throttling the Qs. Anyway, so that's kind of why I made that video today. Anyway, hopefully you guys saw that video and liked it, or if you didn't, that's fine. Leave me a comment. All right, so is a green portfolio or positive return too much? Yeah. I hear it's on the way. It's on the way. All right, so 49 watching. Let's get, don't mind if you don't mind smashing the like button, that's great. I never remember to say that. Higher high, higher low, accumulate and rip it. Absolutely. I don't know what jump the creek means, but I'm all for it. We just don't want this market to jump the shark. I mean, a lot of people say the market has jumped the shark. Maybe Bitcoin has jumped the shark. In other words, I think that means it's done. It comes from the old Happy Days episode when Fonzie jumped the shark, and it was kind of how you knew that the series was over. It just got so ridiculous towards the end. A lot of TV shows have a jump the shark moment. Put your favorite jump the shark moment, if you have one, in here. That's fine too. Maybe you should short. I wouldn't short it because you end up having to pay the distribution, but maybe buy puts or something. But also the distribution is priced into the puts, but maybe buy a put spread or something. Heck yeah. Gonna buy more blocks soon. Yeah, I am too. I mean, so that's something else we can talk about real quick. Let's talk about I made some changes right at the end of the day on Friday. And I was at 18 on ULTY and I cut another third of it. So I've sold a third of it twice. I went from 28 to 18. Is that a third? Basically. And then I went from 18 to 12. But it's not because of anything to do with this. It's just the market. I mean, I'll probably regret doing it. The market is terrible lately. And this is so highly related to Bitcoin and that kind of stuff. But anyway, so then I have KYLD. So ULTY gives me yield. It pays a big yield. Even with the new build, it's going to pay 60 to 65%. That was also in the video today. If you watch that, I think the new build will make ULTY pay 60 to 65%. The key is that's great. It's going to make some people mad, but the key is, can you make the NAV better? Can you make the NAV perform better? So we'll see. We shall see. Then we have KYLD. This one is in here not for yield. It'll make a respectable yield, but this one's in here just because Howard's a badass. And I think this one's the most hedge fundy type thing. So, Howard's just out there buying options. He doesn't only sell options. He buys options, does earnings trades. I mean, anyway, or Howard's trader does. I mean, Howard's in on it too, but he has a trader that's really talented and likes to buy premium. So I like the guy. And we have blocks down here. It was like higher. It was like 11%, but it keeps, or 12 or something, but it keeps dropping and messing up my allocations. Then I just put Salty in here in case, just in case. I'll be happy to take it off as soon as crypto goes back gets out of a bear market. I'd be happy to take that thing off. Proud to take it off. Anyway, then I have WPay in here once again for upside. That's why it's in here. It's for upside. Pays a decent yield. It pays a good yield, but it also has a lot of chance at upside. I don't have too much of it because I'm a little bit scared of the downside, but I'm thinking about adding more into a dip. Now, QLDY is also in there for upside. This thing is hanging right with the Qs. That's in there for upside. BITK, this does the T-SPY strategy, selling daily options only during the day, uncapped at night. So if Bitcoin will go back up, this one will be this one's in there for return. K gold and K silver in there for hedging. And lately gold has not been doing great. And then the rest are fractional. Let's go look at gold. What are gold futures doing? I want gold to rally. I have 10% of my portfolio on precious metals. Did I buy the freaking top? Let's just look at gold, or maybe we should look at gold futures. I forget what gold futures are. It's AU, right? Yeah, AU. See, that chemistry class did help me out. Or well, it wasn't chemistry. I don't know where, but the periodic table of the elements comes in handy sometimes. Okay, well, that's Apple. So obviously that looks really good. Gold futures. It's because it's a foreign stock or something. I don't have that level. Gold is GD. It's GD. Okay, they're going straight sideways for a while. Looks like they basically aren't trading or whatever. Would probably when whatever exchange they trade on opens up. I think this is the Russian exchange. I mean, what else can RUS mean? I mean, and I don't know why I can't get. Well, here's the S. Okay, here's domestic gold futures, and this one is illiquid. So anyway, it looks like gold's going sideways, but let me pull it up here. Yeah, this isn't the most. I don't think you're going to get a very good feel on this chart, whatever that is. It's just it's the GSCI commodity index, whatever. All right, but anyway, so those are my plans. Those are my plans. Texas is being canceled. Oh yes, we haven't even had any leaves fall here because we haven't had a night here. Usually we get one night where it gets down and knocks all the leaves off the trees, and then maybe a rainstorm and it blows the rest of them off, and then it usually gets warmer after that, and then we're wearing shorts all winter long. But usually we've seen some color. There's no color in the trees down here, and I mean this jog that Jackson went on is the hill is just so steep, and it's so steep, and even though we just walk up the hills, we jog down the hills, jog on the flat parts, but this is right in the sun, and it was like 85 degrees today, and Jackson and I we're just 1 foot in front of the other. It's like running stadium stairs. You guys know that. You guys have probably run stadium stairs. Anyway, it's literally like running stadium stairs, but it lasts for like 3/4 of a mile, and it has three lifts. Anyway. All right. So what's going on, Chad? Oh, Wyckoff distribution. I think that's right. I know what you're talking about. I love technical analysis. I love order flow the best. And that's technical analysis too, just another, but I think order flow, which ties in with market profile and volume profile. And that, that's, I think, kind of my favorite. But I have a real good friend that got into Elliott Wave and actually made some really good trades with it and stuff. Yeah, there's so much stuff to look at. Oh yeah, XAU USD. Good point, Chad. Let's go back to that XAU. Okay, XAU E-mini utility select sector futures, and yeah, gold per ounce. But see, this is weird exchange. What's BIST and Swiss code? Anyway, we'll just use this one. All right. Well, that looks good. It looks good, but they've lost their 50-day. That's, it's in the cautionary. It's the first time it's lost its 50-day in forever. Yeah, good. I'll remember that one in the future. Thank you, Chad. Chad helping me out. My interview was so early because Rod lives on the East Coast, and I believe he does it before he goes to work. And so, I can't believe Rod does what he does and works, and really ETF Inspector too. But Rod has live streams on all the time. They're usually early in the morning. I think Rod likes to get up and get stuff done, probably while his family's still sleeping, so he still has time. Rod's a family man, so he still has time to sleep. Okay, I didn't mention in the other video. I really didn't talk about me too much. Right now, we can see that they're holding cash, but it's with I don't want to hold cash. It's with the intent to buy something. So here's kind of the things I'm looking for. I'm really looking to get more QLDY, and really probably more WPay. So those are on the list, but then there's ones I don't have that I really want. And it depends on which way the market breaks. But I'm thinking about some buffer type funds like a CAIE, which is an auto callable index, or maybe a barrier fund, or I'm really kind of thinking about CLM or something, especially if the market situation gets worse. But I'm just going to kind of see how it shakes out. But if I had to buy something, I might also buy my GPTY position back. I sold all of it because I'm on Twitter too, and everyone's saying, Yolmac sucks, and I'm in Discord. The guys in my Discord hate it, and anyway, but also I'd had a huge profit in it because I bought it as soon as the tariffs were canceled, and I had a lot of it, so I sold all of it. But really, I mean, as good as it's doing, I mean, especially after my own video today, I could buy it back for cheaper right here. So yeah, so I'd say, but I don't know if I'm that into doing that, but that's one possibility. But for sure, QLDY and WPay need a bigger allocation for sure. And depending on if the market, if I'm wrong about Salty and have to sell it, that's fine, but it'll free up money to get, then maybe at that point I can buy the dip in GPTY. But yeah, GPTY is amazing. It's been an amazing performer. But there's a lot of them. I mean, I went, if really the market goes really bad, I really think that RSPA might work. That was on the max factor. That's the equal weight SPYs. Something like that might work, or maybe even IVVW. IVVW is super safe, low expense ratio. So I have 4 or 5 things I'm mulling over, but right now I'm just going to wait and see what happens. If the market keeps going down, cash will, having 17% cash will help. And then hopefully I can do like I did on Liberation Day. And if something happens and turns this around or something, we start making higher lows and higher highs and, and start rejecting lower levels and trapping bears, then yeah, I think QLDY and WPay are probably the first on the list, but I have 4 or 5 other ones I'm also thinking about. Yeah, but thank you for asking. Jared, I don't know if I'd seen you around here before. I mean, other than tonight, but I appreciate you guys. Why not some Eggy? I don't know. I'm not an Eggy absolutist. Let's see if Eggy can beat my GPTY. I didn't test Eggy today. Eggy does perform good. I think it does beat GPTY. I think I tested it the other day, not against GPTY, but against something, and I couldn't believe how well it was doing. But one of them pays like a 4% yield. The yield was too low at GPTY. So I'm telling you, GPTY, why did I sell that? I mean, the only saving grace is I got a high price for it. So, and it's been going down since then. But man, I mean, you have Eggy, you have EggQ. One of these is doing really well, or maybe a couple of them. Yeah, not that one. What's the other one? EGGS. But there's so many good ones out there, but those just don't, I mean, those don't really, those don't interest me as much as the other ones that I'm talking about. I'm really interested in QLDY. QLDY is incredible. I would really like some more GPTY. I could buy the dip and, and I would really like some more WPay. WPay is going to serve me great when the market turns around. So anyway, if there's anything else you guys want to talk about, we can, but otherwise I can let you guys go and I can go as well and get some rest. If you're in my Discord, be looking for a message and I'll give you guys instructions on what to do. It's like a dead man switch or whatever that's called, where if you guys don't hear from me, by a certain time, in the movies, you're supposed to release some papers release the smoking gun to the newspaper. But in this case, you're going to blow up my phone. I'm going to have my phone next to me, my iPad, because I'm just super nervous about screwing this up. I won't. I'm really good about waking up, but I just do not want to mess this up. So anyway, be looking for instructions in YouTube for the guys that are my regulars in YouTube. I'm sure Marcus or Mark will be able to help me. But Retire, if you're still listening, it's 9:00 in New Jersey. You probably need some sleep too. You guys need some sleep. So go get some sleep. All right. And I will, let me read my disclosure. Gosh darn it. I hate how I wish it would override. Okay, it does. Remember, it's not financial advice. Consult a professional advisor. YouTube's a great place, I think, to research and get ideas. But then go to your advisor and say this, I heard this on YouTube, and your advisor may say, no, that won't work for you because of this tax situation and because of this other situation with something else that an advisor knows about, and I can't know about that. I'm giving you ideas that are good for me, but that may not be good for you. And also, if you like this kind of content and you'd like to support the channel, you can go to paypal.me, maxconvexity, and I always appreciate that. But other than that, I'm going to check the comments and I'll let you get out of here. Yeah, everyone have a good night. What are you asking, Chad? How much of a tip to show up in a stream with the Mohawk? I'm not following you on that. I'll wait a second because this is interesting. Plus, you're my, how much of a tip to show up in a stream with with a Mohawk? I mean, I ought to just shave my hair. It's getting so thin, I've always had a pretty good head of hair. But probably just ought to shave it all off because it's starting to look ridiculous. Yeah, no, I got you. Yeah, no, I got you now. Well, yeah, no can do on that. No can do on that. I am going to go get a haircut next week and start looking a little bit more presentable. All right, guys. Well, hey, thank you very much. And you guys have a wonderful day. If anything you forgot to ask me or we need to talk about, hit me up in Discord. And I will talk to you guys later.